Welcome back, everybody. It's time to look for new positions and track some more transactions, so let's get right to it. Okay, here we are logged into Thinkorswim. We're logged into our paper trading account. We're reviewing the transactions that happened with BITO last week. So it looks like we had placed this cash secured put order last week and it executed and got filled. And so the strike price is 27. And it looks like that was not, well, we would have seen an assignment fee, which there was no assignment, so it didn't get assigned. So it was 27, and let's see, where did BITO end? So BITO's last trading price was 28, so it was lower. It was lower than what we're in it for, so it didn't get assigned, so we got to walk away with it. So that's nice. Let's just look at the chart, because I want to verify. So yeah, the last trading price is 28. Okay. All right, so what we need to do is we need to go over to the web application and track this transaction from the cash secured put, and then look for some new positions to get into. We'll say this covered call doesn't expire till June 7th. So that's out next Friday. I'm probably actually going to start moving these into monthlies, so we can play that a little while as well, just to show you that you can do weeklies, but you can also do monthlies. Start giving a little bit more time for these to play out. So let's go over to the web application. Here we are logged into the web application at myatmm.com. We're setting on the dashboard, so what we need to do is go over to the cost basis screen, make sure BITO is selected, which it is. Okay, and we need to track that transaction. Let's get Thinkorswim up on the screen so we can make this a little easier. There we go. Okay, so we need to come over here, create a new position on the board. The date of execution looks like it was back on May 20th. So we will show one on May 20th. The size sell to open, it was a put, one contract. Need to, let's see here. Expiration is May 24th, or sorry, this past Friday. Strike price is 27. And we got 64 cents per share on that. All right, let's expand puts because that's where it went. It created the proposed transaction, 65 cents, 2 cents for the fees. Let's go ahead and move that down, save this. All right, so we've saved that, and as we know, the last executed trade price is 28 and it's above our strike price, so this expired worthless, so we basically got to pocket that $64 free and clear. So we can go ahead and remove this position because it's expired. Again, normally you track this, on a daily basis if you want, but we're only reviewing it once a week, so we have to basically add the position, get the transaction recorded in the transaction history, and then we can just go ahead and remove it. All right. So we have a clean slate, so to speak. I mean, we're in it with 600 shares owned, and our unrealized loss is $558. Overall, we've collected in premium throughout the duration that we've been trading this one. We've collected over $1,300 in premium so far. So overall, we're at a net positive if we wanted to liquidate right now. So as you can see, our cost basis with premium is setting at $26, and it's currently trading at $28.07. All right, so we have 6 contracts, it looks like, going to expire on June 7th. So I think what I'm going to do is I'm going to check the extrinsic value that's left in these contracts, and I might look to just roll them over to a longer term. I'm thinking about just going monthly for this position, and then I will also sell a cash secured put out a month as well. Because I just would like to give it some more time and possibly put a little bit more distance between the reviews of doing weekly reviews, probably jump this to a month review until we can get this position done, because there's some other things I need to take care of. And this also demonstrates the strategy that it doesn't have to be weekly. You can change it up and move it out to monthly if you want, and it's pretty much hands off. I mean, you pretty much set the positions and just let them go, and you can come back and review it at any time, so it's not like a gotta watch the chart kind of strategy, which makes it pretty nice. All right, so we recorded that transaction. before we leave the web application, let's go ahead and check our balances to make sure that we're still matching. So the brokerage or the website is showing $84,991.82, and that's exactly what the web or Thinkorswim is showing. So we match perfectly, so that's good. All right, let's jump over to Thinkorswim. We're going to look for a cash secured put position, and we're going to look to roll those covered calls. Probably we're going to pick a monthly, probably the next monthly out, to sell the cash secured put at and the covered calls, which if they're out about 30 days, that'll give us some bigger premiums as well. All right, so let's go look at that. All right, here we are back at Thinkorswim. Let's get the cost basis up on the screen. There we go. All right, so we're in it. Our cost basis is at 29, and so that's where we need to stay at for our covered calls. So our covered calls are currently sitting at 29. So let's come over to activity positions. All right, so we have a total of the 6 right here. And extrinsic value, now it actually has a pretty decent amount of extrinsic value, 52 cents. But we're going to look to roll this anyway. I will say it's on June 7th. So let's first come over to the Analyze tab, make sure we got BITO selected, which we do. So 29. So that's out 12 days. So we're going to look to go to here, to the next monthly, and then that monthly. I want to just compare the monthlies. So let's pull this one. So this is 26 days out and 54 days out. And our covered calls are at the 29 strike. So 29 strike out to the first monthly puts us at 81 cents to 93 cents is the bid ask. If we go out another month, we get 92 cents and $1.12. I think I'm probably just going to stick with this one because if you'll notice, I mean, that's not much more for a whole month. You see that? It's like 10 cents more just for another 30 days. So that's definitely not worthwhile. And the 26 days out will give us some more time to take care of what we need to take care of. This is just some personal things I need to take care of over the next couple weeks. So I want to buffer this out. And it's kind of the same story for you guys. I mean, like if you were like going on a trip or going on vacation, you could always just choose to sell this out several weeks in advance, and then you don't have to worry about the position. You just come back whenever you're ready, and then see what they did in the meantime. You don't have to watch this on a weekly basis or even on a daily basis if you don't want to. So that's kind of basically what we're simulating here. All right, we need to come over to the monitor tab, click on the covered call position that we're currently in with 6 contracts. We're going to right click on it. We're going to create a rolling order. And again, remember by default, it goes out 1 additional week, but we are looking for the June 21st one because we want to go out to this monthly. So let's click the drop down. There's the first monthly. And actually, I just want to show you this. So right now it's setting at 12 cents credit just to move it out 1 week, but we're going to roll it out to the monthly. So we're getting 34-cent credit per share per contract. All right, so we're going to run with that. Click confirm and send. So that's the total credit we should receive when it executes. Go ahead and click send. So that queues up that rolling covered call. Okay, now we want to look for, it's interesting, this thing changed it over to a different ticker. That doesn't matter for the position that we were looking at. So, all right, so here's where the position is at, and it's selling or buying and selling that to roll it to the June 21st position. So we're way out here, and that's showing way too many strikes. Let's take it down to 10. There we go. We could probably even go a little lower. Let's go to 8. 6 maybe? Yeah, so there's our position where we're selling it. Man, can we go down to 4? Huh, we can. Okay. All right, so this is showing our current position that we're looking to sell out to. So what we want to do now is look for the cash secured put. And I'm not even going to look at the previous weeks because, again, we're trying to push these out to a target date in the future because we got to take care of some things over the next couple weeks, and we don't want to have to watch this. So we can just push it way out there so we don't have to come back and look at this until then. So the covered calls are already setting out there. So now we need to line up a cash secured put with the same mindset. And I am going to go ahead and stick, I do want to look at this. You'll notice that the 28 $1 is setting with a $2.37 extrinsic value, but 28.50, so it's 43 cents more than where it's currently trading at, is 43 cents. So 43 cents plus that is what, 42.80. So it's an additional 20 cents above the 50 cents or the 43 cents. And where I'm getting the 43 cents from is 28.50 minus the last trading price, 28.07. And I'm getting the difference in this extrinsic value for the 28s versus the 28.50. So I'm actually going to do something I haven't done quite before, and that is to buy an in the money, or not buy, but sell a cash secured put that's in the money because it has the most extrinsic value. And I realize that we're pretty much doing this right at our cost basis of the 29. So it's not ideal, so to speak, but I'm going to do it since we're setting it out a month because I want to collect the most extrinsic value for it. So I'm going to go ahead and left click on this and sell an in the money cash secured put. So I do get that gives us a 50-cent window between the covered calls as being assigned or us getting assigned on the put, but I'm okay with that for this demonstration purposes. So in a month, if it goes down quite a bit, we'll just get assigned on the cash secured put. If it goes up quite a bit, we'll get to keep this 28.50 premium for the cash secured put, and we'll get called out on our covered calls. Either way, I'm okay with that. I'm okay with staying in this position a little bit longer. That is completely okay with me. All right, I do want to note that this is a big difference in the bid ask. So if you'll notice, 28s is much closer, 29s, a little closer. I don't know, man. 249 to 460, that's a big gap, isn't it? We're probably going to get it closer to this 249 most likely. So let's just look at the mark. I got the mark right here. So it's $2, 237. See, it jumps all the way up to 350. That's not. And then it goes back down to 320. So this 350 is not accurate. I would say the mark really is somewhere between 230 and 320. So this went up about 37 cents. So if we went up another 37 cents from there, it might be closer to accurate. Let's pull up a calendar, or not a calendar, a calculator. All right. So 237 plus 37 gets us to 274. And I think that's probably closer to accurate. We're going to go ahead and put it in at 275 because that's in between here too. All right. So we left click on the bid right here, and we're going to come up to 275. And again, I'm going to watch this. The market doesn't open until Tuesday because tomorrow's Memorial Day. But I'm going to watch it on Tuesday when the market opens and see where these are at and adjust it as needed to get them to execute. All right, so we left click and click on confirm and send. That's 274. Go ahead and click send on this to get that queued up. So now we have the covered call, rolling covered call order queued up, and we have the cash secured put queued up. And we'll just wait till Tuesday when the market opens to see what happens and see what we can do from there. And we will review this basically the Sunday after this expires, so about 26 days out, and we'll review it then to see what happens. Hope you guys have a good Memorial Day. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.